Good morning, students. I am Shafra Samir. In my previous video, I explained y'all what is assets, capital, and liability. So in my this video, I am going to introduce you all to the accounting equation. So I am going to explain you how the accounting equation is built. Okay. Okay. So before teaching you all what is accounting equation, I'll take 1 minute. I'll take 1 minute to explain you all what I did in the previous video. It was a 15 minutes video. It was a little lengthy because I explained everything with examples. So just I'll take 1 minute to explain this, what is assets, capital, and liability. Okay. So first, assets. So assets means, we discussed in the previous video, assets means what? The resources that belongs to the business. The resources that belongs to the business is only called assets. Example, land, building, motor vehicle, machineries, equipments, all are called as assets. Understood? Okay, next, capital. Capital means what? Anything owner is contributing to the business. Anything owner is putting to the business is only called capital. And next, liability. So liability means the payable of the business. Liability means the payable of the business. So liability means what the business have to pay to the outside party. Example, bank loan, trade payables, bank overdraft, accrual expenses, all are liabilities. Okay, so this is what I explained you all in the previous video. Okay, so I'm going to discuss the first example. Owner invested cash $100. Okay, so what we're going to do is, owner invested cash $100 is the example. Understood? Okay, now if owner invested cash to the business, what will happen to the business? If owner invests cash to the business, what will happen? Okay, what will happen is, so we know cash is asset. We know cash is a asset. So when owner invested cash to the business, cash is asset, no, cash is a asset. So what will happen? Assets will increase. So assets plus 100 cash. So if owner invested money to the business, the assets will increase by 100. So he's investing 100. So asset is increasing by 100 cash. Understood? Okay, now capital. So owner is putting something to the business, no? So previously owner didn't put anything. Now he is putting something to the business. Now what is happening? Now the capital is also increasing. By 100 capital. Understood? So from this, what you can say is, if owner invested cash to the business, assets will increase, capital will increase. That means, if only owner invested money to the business, only if owner invested money or any other assets, then what will happen? Then assets will be equal to capital. That means only if owner is investing something to the business, then assets will be equal to capital. Understood? Okay, now I'm going to take another example. I'm going to take the second example. That means we'll assume the business is obtaining a bank loan of $50. Understood? Now how much will be the asset of the business? Okay, now owner introduced 100,000 is there. So this is the second example, which is coming next to the first one. Okay, so owner introduced 100 is there. $100 is there, plus owner introduced $100 is there, plus a business is getting another 50,000 cash. Cash. $50 cash, not thousand, $50 cash. Okay, so how much will be the total? That means owner's 100 is there. Bank loans 50 is there. So total money the business have is 150. The total money the business have is how much? 150. That means owner's 100 and bank loan 50. Okay, now capital. So capital will it change? No. So capital is always 100. Why owner put 100? No. So capital will be 100. And now what is a new thing it is coming? And now a new liability is coming. That means bank loan. So bank loan is a liability. So earlier there was no bank loan. So now what is happening? And now a 50 bank loan is coming. So capital 100 is there. Liability is plus 50 is there. So the total asset of the business will be how much? 150. So assets will be equal to capital plus liability. That means initially, if only owner is investing anything to the business, initially only if owner is investing anything to the business, assets will be equal to capital. Understood? Okay. Now, in addition to the owner, if any outside party, in addition to the owner, if any outside party, example bank loan. So if any outside party also investing anything to the business, then what will happen is assets will be equal to capital plus liability. Assets will be equal to capital plus liability. Understood? So for this only we say basic accounting equation. Okay. So now I introduce you all to the accounting equation. I explain you all how the accounting equation is built. Only if owner put anything to the business, assets will be equal to capital. If any outside party is also putting, assets will be equal to what? Capital plus liability. Okay. In my next video, I will introduce you all to the expanded accounting equation. I will explain you how to expand the accounting equation. Okay. So thank you very much to watching this video. So like it, subscribe it and share it with your friends also. Thank you very much.